Hey there, Adam Pospisil here from the Pospisil Realty Group, bringing you the September 2023 market update. Let's dive into it. So we've had an interesting month here. We've just got the August stats out. It's been quite fascinating what's happened. We're going to look at a couple different categories here and see where we're at price-wise. So the benchmark price basically for detached is up just 0.3%, down 0.1% for attached townhomes and duplexes, and down 0.2% for apartment and condos. What's interesting though, of course, is we're looking at year to year, it's still up 3% in detached, 4.4% in attached, and 3.9% overall in attached apartments. So when we look at overall activity, definitely up versus last year as well. So we're seeing a bit of a leveling off overall in pricing, but still up versus last year, due mostly in part to the big busy spring that we had in our marketplace. So let's talk a little bit about what's hot and what's not, what categories are we seeing the most activity in. So we were familiar with our sales ratio there. Basically everything within the west side in detached, in summary, is in a balanced market at a 13% sales ratio. Condos and townhomes in the west side, however, are much more active, a 28% sales ratio. So remember, anything over 21% is indeed a seller's market. And that's down from just 27 the previous month, so holding pretty steady there. Likewise, condos and townhomes downtown, a little bit more active, that's gone to 19%, but still holding that balanced market category as it was last month. And detached east side, again, sort of leveled off, not surprisingly, at 19% versus July was 20%. And then, of course, last but not least, Vancouver east side condos and townhomes, still very active. That's into a seller's market, well into a seller's market at 37% sales ratio, and it was at 35 last month. So primarily driven by affordability. We'll get into that a little bit later, but east side condos holding the strongest of all four of those categories. Then we can look at this kind of graphically. We can see detached is our green line there, and that's holding steady in that balanced market, seller's market there for condos, but just so for west side. And then for the townhome products, again in balanced. And then here we have east side. So as we were talking about there, we're in that seller's market there in the condo category, and then detached is into the balanced market. So what's happening with prices? Of course, this is also a very common question that we get, so let's talk a little bit about that. This is the graph you're very familiar with. This is a residential average sale price graph from Real Estate Board of Greater Vancouver. And this is all for all of Greater Van. Let's talk a little bit about that. So for detached houses, that's come up again last month. For townhomes, kind of leveled off and came down just a touch there, similar to that other data that we were looking at just for Vancouver. And as well for condominiums as well, leveling off and tapering just a little bit. So detached being the one category overall for Greater Van that's performing the strongest if we look at the last couple months trend. Now we've got average price by region, kind of interesting. They're not all performing the same. We look at Kootenay and Okanagan performing differently, for example, than the Lower Mainland, where we take the average price overall for the year and it shows it down. So what's next? Let's talk a little bit about the forecast for 2023. What is the remainder of the year going to bring us from the fall and through to the end of the year? So we talk about our market drivers. These are the same four categories that we look at every month in our updates. Let's talk a little bit about what's happening with those four categories. So we'll start with the two that are really enhancing our market, making our market more active. The inventory levels, so we've seen that in the previous graph there. The inventory, the number of homes for sale is still low. Seasonally low and overall low for almost every category. There are some exceptions to that, but that is what's fueling some of this sustained either price growth or leveling off. And consumer confidence and demand, there are a lot of consumers out there that would like to purchase. They're being held back by a couple factors we're going to talk about, but there is still very good, strong demand, and that is what's supporting our market and driving it today. And not a lot of inventory for them to look at. Overall cost of borrowing, so this is the mortgage rates, they've remained high. We're going to talk a little bit about what the forecast is for that as we will get our announcement in the next week here for interest rates. But basically we've seen that be rising over the last while, and that's remained high, and that's been our biggest detractor from our market as it's become harder and harder to get approved for a mortgage, and of course the monthly payments for most people in most categories have come out of reach for certain home types that they would need. And then the inflation in the economy. Inflation has been stubborn. Boy, oh boy, we've seen it come down, and now it's come back up a little bit. So that's the interesting piece that we're going to watch. But the economy has contracted a little bit too. So we're going to talk about what that means. But overall, inflation is up. The economy has come down a little bit in overall performance. So consumer confidence and spending, let's talk a little bit about that. So we were talking about the economy contracted slightly in the economic data for all of overall in Canada, and we see that reflected in overall retail sales being down a little bit. Just again, overall sales by region, what's happened with those. This is quite interesting, looking at the migration flow into the province, talking about overall demand and where that's coming from. So primarily from Toronto and Calgary would be the greatest, for the Vancouver area specifically, a little bit from Abbotsford Mission, so out into the Fraser Valley, and then a little bit more from Alberta there in Edmonton. And then the rest of it is kind of sprinkled through parts of the interior and Eastern Canada as well. So quite interesting though that Toronto and Calgary still are the top two locations for migration to British Columbia. Unemployment rate, so we talked a little bit about our economy and what's performing there. The unemployment rate has risen a little bit, and that will probably play into the decision for interest rates. We're going to talk a little bit about that. So this is just a little excerpt from a summary here talking about what's happened so far in our market today. And this is quite interesting because this is where we get into talking a little bit about rates. Now, rates is something that everybody's been watching here in the real estate market, homeowners, realtors, everybody alike, to try and figure out what's going to happen with rates next. It's a bit of a toss-up as we get into this next announcement, but there are some indicators that we can look at. Probably the greatest one being the Canadian GDP contraction. This is a forecast from Capital Economics. Stephen Brown, he's a well-known economist. So we had that 0.2 sort of consumer spending change, but really just a little bit of the contraction in the economy, people spending less, businesses earning less, things just sort of shifting overall is going to be something the Bank of Canada is going to look at very carefully when making decisions now for this interest rate hike. And we're seeing all sorts of predictions, of course, come out as they always do prior to the Bank of Canada announcement. And RBC, their economist, Nathan Jansen there, coming out to say that there's probably not going to be another rate increase as we see it. We're talking about the cooling of GDP, the overall economy, and what's happening with the labor market. So basically, in summary, our take on it is there is some data that's showing the Canadian economy is weakened, and it's going to be kind of a bit of a fine line now. They're not going to want to overshoot it by increasing rates too much because we've already seen a bit of a weakening in the economy with a decrease in GDP and also an increase in unemployment. So it becomes that fine line to walk where they want to continue to bring that inflation down, but also don't want to overshoot it and force the country into too much of a recession, perhaps. And inflation, that's been up at now 3.3%. There's the graph of what's happened to it. There's that post-COVID swing, and then as we saw those interest rates take effect into this year. So let's talk a little bit about what's happening in Canada and the Fed. So as we know, our interest rates are very much tied to what happens in the US and what the Fed does with their rates. So we're tracking a little bit differently. In the US, their inflation rate is a little bit lower. Their announcement will come a little bit later than ours, so the Bank of Canada makes their announcement first. That may perhaps force the Bank of Canada to do something come November, but we'll see what happens with that. But in any event, both are still showing a little bit of a higher rate of inflation than that target that they look to hit. So all that to say, Canada will make its announcement first, followed by the US Fed. If Canada holds the rate and then the Fed increases theirs in the US, that may force Canada to perhaps do an announcement in November to increase the rate to try and stabilize the Canadian dollar, because that can affect it having a differential there. But again, a lot of factors as you get the sense now. So this is quite interesting too as we talk about inflation. That certainly has impacted rental rates, and this has been impacted by our overall real estate market too. And basically we're just seeing rents climbing in pretty much every category. There's been a little bit of a shift in just one category there in the Victoria one bedroom, but you can see for the most part that's been steadily rising throughout the year. Cost of borrowing, so again, something that everybody's looking at very carefully now for a 5-year fixed. We're basically looking at, for the August data, at 5.8%. So this is the number one factor that is affecting our buyers today out in the market. At those rates, they're a drastic increase from where we were previously for people's affordability for what they can get approved for. And that is affecting their overall monthly payments, of course, too. So some forecasting on rates. Again, this is one that's a bit interesting because this is changing a little bit, very dependent on what happens with these inflation rates. There was some consensus we'd start to see a decrease in rates early next year, but that's maybe perhaps being pushed back a little bit more. All going to really depend on what happens with those inflation rates, both here and in the US, because again, those are very tied together. So there's our forecast there. Again, perhaps might change a little bit more into next year. Let's talk a little bit about inventory levels. So we were talking a little bit about what's available for sale. So inventory in the west side for detached came down a little bit last month to 530 homes. So a little bit of a shift, not dramatic, but we can see that the prices tracked up overall. And then west side condos and townhomes, again, just down slightly. And why are people not listing? This is the big question. Primarily, we're seeing this all the way across the country when you layer all these different major cities on there. People are primarily not listing for two reasons. Number one, the interest rates make it very tough for them to get reapproved for a mortgage into their next home. And number two is they're having a hard time seeing what they want to buy because the inventory has been very low. Talk about active listings. So again, that's starting to shift a little bit in the Lower Mainland. We're seeing that come up a little bit. Other parts of the province, a little bit mixed, but we have started to see that inventory rise now a bit. So, what are home buyers searching for? This is very interesting. This is from Realtor.ca. This shows the primary search filter that home buyers are using for different categories. Basically, we're seeing that 2 bedrooms is the number one searched for category. 3 bedrooms is the closest following, and then larger homes. Interestingly enough, 1 bedrooms are a little bit lower down there on the list, probably because primarily the first-time home buyers and the investors are less active in our marketplace today because of interest rates. That would be our insight into that. What are home buyers searching for further? Homes, detached houses is number 1, followed by townhomes and then apartments. These are stats for Vancouver. And this is interesting as well, looking at the type of home buyer. So the repeat buyer, again, 53%, probably not surprising again with today's interest rates. These are going to be buyers that have equity in the marketplace already. First-time buyers make up 35% of that, so it's a little bit smaller at the moment just because of those rates and the difficulty getting approved for a mortgage. And not surprisingly, investors are a much smaller part of our market right now, and that's primarily because those investors would have a harder time getting the numbers to work on a rental property today with what the rates are. So what are the home buyers searching for finally? This is very interesting. This is Canada-wide, looking at some of the greatest search areas. Vancouver kind of inching ahead at the top there, followed by Calgary, Alberta, and Kelowna for Western Canada. So, and then just some keyword search as well. So kind of interesting to see what the preferences are out there. What's next for prices? This is, again, the million-dollar question. In conclusion, these are the factors we're watching in our take on what is going to happen that's going to affect our prices. So inflation has been stubborn. We've seen it go down a little bit. Now it's come back up a little bit in that monthly rate. And so this is something that's going to be watched very carefully to affect our interest rates. So we'll see what happens with that. If it remains high, there's going to be pressure to keep those rates high for a duration of time, or maybe even increase them further. The economy is cooled. That was the little bit of surprising piece of data that we got recently. That's kind of on the other side of the scale, where it may decrease the Bank of Canada's desire to increase the rates, because if the economy cools too much because of rate increases, that's not good either. So that'll be a factor that'll be watched very carefully. And so as a result, like we were talking about, the Bank of Canada may now hold rates. We will see what happens with that. And while mortgage rates remain high, it's very difficult for families to jump into the market, difficult for investors to jump into the market. This is what's overall keeping the mobility in the market or inventory very low. And many buyers in the market right now have equity, as we were talking about, just because of the difficulty of any borrowed funds and how much that costs on a monthly basis. Primarily, we're seeing buyers with equity in the market, maybe perhaps upgrading or downsizing and using the existing equity to do so. So we may see a busy fall if rates stabilize. People have been kind of doing the wait and see to a certain degree in our marketplace to see what's happening with rates. They've been increasing quite steadily and quite dramatically over the last couple of rate hikes. And so if there is a bit of a stabilization, some of that pent-up demand of people waiting to see what's going to happen may enter our market. Probably likely we're going to see the greatest effect on our market when we see a drop in rates. So many people are going to need that drop in rates to really jump into our market because, again, the affordability, the approvals are very difficult to get into, and those monthly payments are just too high for many people at the current price levels. So if prices are remaining steady, which they are, as you saw in the earlier graph there, it's going to take a drop in interest rates to really fuel our market back into an upward swing, or it may stay in this little bit of a holding pattern for now, and not a ton will change. So thank you very much for joining us for our September market update today. I'm Adam Pospisil. You can subscribe on YouTube. Please do. We'll keep you right up to date with all the market updates that come out on a monthly basis. You can like us on Facebook. We've got all of our listings on there as well as they hit the market, so follow along. We've got Instagram up there. Again, lots of this content and some of these graphs you'll see come through there as they're updated. So great place to follow along if you're on Insta. Apple Podcasts and Spotify. We've got some great content on all the podcast platforms, primarily to do with real estate. And so follow along there if you'd like some more great content. That's got both the market updates and some great guest speakers. So again, have a great fall. Thanks very much for joining us. We'll see you in October.